Hey traders, the Chart Guys Swing Report newsletter is currently live. In the description of this video, there are two links. The first is to the sign up page where you can also get emailed an example of a previous copy. And the second is to an in-depth video to let you know exactly what the Swing Report entails. Appreciate your attention. Let's get on to the charts.
Hey traders, checking in. So a wild start to the week as we had a big push up for the bulls and then we completely 180 turnaround and pulled back. And it's not very surprising to see the tech sector do that. Why? Because we were in maximum euphoria mode. Every day was all-time highs. Every single day was a high or low for the last 8+ days in a row. And that's generally how we top out from these euphoria moves. We see a last big bull push up and then a complete 180 turnaround and a weak close. So we're certainly not in the business of calling tops, but we can recognize these signs and we know to be cautious. So the last video we put out, the thumbnail was cautious tech. And if you had asked me, you have to pinpoint when the top is going to be, I would have thought the tech sector would have pulled back maybe 2 days ago. So it even held up a little bit better than I thought it would. Sunday night, I posted these SQ, ZM, PTO, and Amazon Tesla weekly charts sure feel a bit bubbly. Bulls still have full control, but we know how these moonshots tend to shift momentum quickly. So again, not calling tops, just saying we need to be cautious at these levels because when the momentum shifts, it happens very quickly. So is this our top? Too early to say. We can't say that. We have a couple of things developing. The first being a very clear double top. This is the S&P 500 futures chart, and we double top at the high of the COVID bounce. So what that does is it creates a narrative that the bears can rally around and that the bulls can look at and be cautious of too. A lot of traders are going to look at that and say, well, that's a double top. I'm going to take some risk off. I'm going to exit some bullish positions. I'm going to lock in some profit because the last thing I want to be doing is holding after a double top, expecting a monthly lower high is the most likely scenario. Remember, we've talked about this monthly chart, and my explanation is the most likely scenario is a monthly lower high compared to the all-time high and an equilibrium through the rest of the year. The only asterisk on that statement is it's the S&P 500, the Fed's printing money, and if anything can V-shape and do the less likely scenario, it would be the S&P 500. Back on this dump, I would have said the same thing. And actually, we did kind of get a little bit of a pullback. But again, V-shape to higher highs. And there was another one back in, I guess I'm thinking of, no, I don't know what I'm thinking of. But multiple times in the recent past, 2016, where we've seen these big pullbacks and V-shaped recoveries. So again, if anybody's going to V-shape to an all-time high, it's the S&P 500. But I would still, you cover this chart up and you don't tell me what it is, I would say most likely scenario, monthly lower high. I would be scouting bearish in this range. So what do we need to see from here? Bears have to prove it. This is a sucker punch. The bears sucker punched the bulls today and saw a swift pullback. Now that the bulls are ready, the bulls have their wits about them. They've stumbled back and they've caught themselves from falling and they say, okay, we're ready for you now, bears. Are we going to see an hourly lower high and lower low overnight? That's step number 1 for the bears to prove follow through. Step number 2 is all of our high-flying tech names to break the low of today, tomorrow, because a lot of those names are still maintaining the pattern of a higher low every single day. Factor number 3, financial sector earnings are this week, and they start tomorrow pre-market, and the entire financial sector is going to react to the correlation that we see on the reactions of those first initial names. And number 4, Netflix has earnings Thursday. That's our first glimpse into the tech sector. And then over the coming couple of weeks, the tech sector will have earnings. And that will be a significant factor as well. So big picture, what I need to see from here, let's look at SPY just to have it nice and simple. If the bears are going to prove anything to me on this daily chart, I need to see a bear break of 310.68 because that will lose our daily uptrend. That was our last little daily higher low bull flag into continuation, reject from resistance, and now it's all about do we break support? Because if 310.68 does not break, the bulls maintain the daily uptrend. IWM, daily higher low was set compared to 136.29, failed to break the high of 145.70, and heading back down towards that support level. So we've got high, low, lower high, higher low, lower high, higher low, lower high, and we're watching to see can the bears break 137.24, and it will likely be the financial sector earnings reaction that determines how this sideways range breaks. Look at the monthly. Odds of a monthly lower high are more likely on IWM than on SPY. But again, we're going to be watching for the same thing. Monthly lower high, scouting a monthly higher low from there, and tightening ranges into the end of the year. Bears have a lot of proving to do for that to be the most likely scenario, but I'm watching for that. And I'm basing strategies and game plans around that. QQQ, so bearish engulfing candlestick, big bear volume. And we did break the pattern of a higher low every day. So daily consolidation is underway. What's the most likely scenario from here? Well, anything over 237.35 is a daily higher low. So we're not anticipating, unless we see this bear volume keep up for 2 more days, we're not anticipating just falling off and losing the daily uptrend. We're looking for daily higher lows. And aggressive bulls can be watching for bullish entries in the tech sector. We're going to be watching for the first hourly oversold conditions, which we were just hitting. So first hourly oversold conditions coming off the all-time high. We know in general you get a good bounce. The difference is timing. End of the day that happened. And normally I would want to see that happen at 11 a.m. to be looking to scale in for a bounce. So if we were to see a gap down open, I'm going to be scouting potential bullish entries in tech tomorrow. If we see a higher open, I'm going to be scouting hourly lower highs on all of these tech names. Anything for QQQ under 269.79, the next time we bounce on the hourly is a lower high. And in my opinion, there will be bears waiting for that hourly lower high. Let's look at all of our leaders here. Amazon, top is hit. Daily consolidation underway. Anything above 26.30, we've got $450 worth of space. Apple, still a higher low every day. Have to break that pattern. And then anything over 351, 10% of space, 9%. So all of these names still have a lot of space to work with to maintain their daily uptrend, but they all pulled back so hard from their high of the day today that we know next time we bounce on the hourly, bears are absolutely scouting hourly lower highs to be the result of that bounce. Financial sector, high was 103.22, rejected by 7 pennies, closed near the low of the day. Bears will prove something to me if they can break 99.68, which was our daily higher low. If 99.68 breaks, weekly top of the bounce, support level, lower high, and then we'll be focused back on that weekly support of 95.42. But first things first, bears need to break 99.68 to confirm a downtrend with a double top and then a loss of the higher lows. Financial sector, gap up open, broke the daily lower high pattern. It was a bit of a falling wedge that broke bullish, but again, earnings are going to dictate where we go from here. Are we going to head back down to the low of 22.49, or are the bulls going to continue this bounce? Keeping in mind, we will have to change the daily trend convincingly to look for bounce follow through, but earnings tomorrow are going to dictate whether we see more space created for that daily higher low, or whether we head right back down to test that low if it's a bearish reaction. Biotech sector, new all-time high today, just barely. We only broke resistance by less than $1, and then we dumped and closed at the low of the day. Daily higher low is 108.43 key support. Even if we were to hold that level initially, we would have to be cautious of a head and shoulders pattern potentially forming. All about 108.43 daily higher low support. We're closer to losing the daily uptrend on XBI than on the tech sector. SMH, bearish engulfing candle after a new all-time high. Tons of space, just like QQQ. I would consider anything above 145.85 as a daily higher low, keeping the bulls in control. Next time we bounce, looking for an hourly lower high, like the vast majority of individual names. The VIX had a bull move today, so we can consider this a trend change, and it's a little bit more clear to me on UVXY. Low of 28.61, high of the bounce was 33.52, higher low at 29.58, and then a bull break. So daily trend change with a little higher low and higher high. So now we zoom out. Weekly chart. Low of 27.04, high of the bounce, higher low at 28.84, and now we're watching, are we going to reject from 51 and set a tightening weekly range? And for the VIX, that level is 44.40. Is it going to be a weekly tightening range, or is the S&P 500 about to see a lot of significant volatility and drop, and can we change the weekly trend to the bulls? And it was interesting, the first thing I did was I went on Facebook after the market closed and seeing a lot of pessimism around COVID and around the situation and the government. And obviously we see headline sentiment shift based on what's going on in the market. Not necessarily headlines coming out and then the market reacting. Way more often than not, in my opinion, you see the market reacting and then they attribute headlines as to why this is going on, when in reality it's normal price action and technical analysis makes a lot more sense than the fundamental headlines, in my opinion. But it's interesting to see, excuse me, see friends just having a spike in bearish sentiment, not having anything to do with the stock market, but just seeing it really seep out into other areas of the world or the country. So overall, can the bears confirm an hourly downtrend? Do we lose the daily uptrend? Do we see a bearish reaction to the financial sector earnings? And that is what we're looking at. Gold pulling back today. 12-hour is the most clear time frame for me, in my opinion. High, bull flag looking for a higher low. Set it. Failed to break the high, so a 12-hour lower high is potentially forming. If we drop down and break 1794 support, we will confirm a 12-hour downtrend, and it'll be the biggest shift away from the bulls that we have seen since this bull break of the 1745 double top, if that support level were to break. What is notable to me is the uptick in correlation when fear hits the markets. So when the S&P 500 consolidated last, there was not fear. We were not seeing fear here. We were not seeing high bear volume and an all-out dump. We were seeing a daily bull flag. But we consolidated and pulled back on July 7th, 8th, and 9th. And if we look at gold, 7th, 8th, and 9th, all bulls. Well, 2 out of 3 days bullish. So no correlation there. So why are we correlating now? Look at the 5-minute time frame at the end of the day. Just lower highs and lower lows. This lower high was at 255 and then another leg down. You look at SPY, what happened at 255? Right there, 255, another leg down. It's the same 5-minute chart. Why are we correlating? In my opinion, fear. Uptick in fear and volatility leading to a correlation where gold dropped with the S&P 500. I don't like that. If I am in a hedge position of gold, I want to see gold withstand while there's fear going on in the broader market. Because what we saw today was, again, all of our assets correlating. Oil, crypto, S&P 500, and gold all correlating on the end of the day dump. So that has me cautious overall on gold as well. Again, there's no major red flags. It's just not ideal. You don't want to see, if you're looking at gold as a hedge, you don't want to see fear lead to increased correlation with the S&P 500 and with equities. That being said, daily 12-period exponential support, anything above 1757 is a daily high or low. Bigger picture, bulls don't have much to worry about in the short term. Silver is much stronger than gold. 4-hour time frame. Let's look at the 12-hour. We just looked at the gold 12-hour, which formed a lower high, clear higher high. Yes, a little bit toppy on silver, but a very different chart. And that is because the XAU XAG chart had a bear break. 94.78, and we broke that level. So the weekly bear flag has confirmed, and this is very impressive for the silver bulls because the most likely scenario is a monthly lower high, and I was cautious being a silver bull looking for the potential of the monthly higher low to form. I might have just said lower high, but I meant higher low. But looking for the potential monthly higher low to form off of the exponential support here, and that bear flag tells us, nope, that monthly higher low has not formed yet. You're certainly still looking for it because anything above 79 forms that monthly higher low. But very impressive for the silver bulls to continue to outperform gold in the short term over the last week. And again, today it stood out very clear. That's what was going on. So with the S&P 500 dump and with the gold correlation and silver correlation dumping down with it, the miners pulled back really hard. The miners react the most significantly when gold and the markets are going in the same direction. So daily consolidation clearly underway. Inside bar bear break. We actually double topped. I missed that. GDX double topped to the penny with the high of Friday. That was a beautiful short. I missed that one. Double top to the penny. Significant pullback. Still just looking for a daily high or low. Anything above 34.08. But clearly seeing the bull momentum lost. This is the most bearish day we've seen in miners in weeks. because the market and gold dropped at the same time. Oil. We've noticed the oil and market correlation, as far as equities are concerned, picking up over the last maybe 3 or 4 days. More notable in the last 4 days than it's been to me in the last couple months. So today, again, same thing. End of the day, same 5-minute charts, just a little bit different. There's our 255 top that we saw on gold that led to another leg down, and SPY that led to another leg down. Seeing it in oil as well. And oil, end of the day, confirming a 4-hour downtrend. Lower high and lower low. So that tells us daily consolidation is still underway. The bulls were hoping that our daily higher low would be set at 38.54. We never changed the 4-hour trend bullish. Big bull move, higher low, failed to break resistance, broke support. So we're still focused on 37.08. I would still call anything above that level as a daily higher low. But if you've been watching these videos, you remember back around here, I'm saying I'm not confident bullish oil. I'm cautious up here. Bears aren't proving anything, but we're just seeming to slow down. We're watching for oil to give us a monthly lower high as the most likely scenario. Certainly way more likely than for the S&P 500. Just time to be cautious bullish. Natural gas. No daily higher low set. 4-hour trend change attempt. Failed. Higher low. Failed to break resistance. Broke support. Seeing natural gas and oil correlate more to each other the past few days than I've noticed in the past month plus. So new fresh low means no daily higher low has been established at this point, and bulls are still looking for that compared to 1562. 1 day doesn't mean a whole lot. But if you pull out a big red day tomorrow in reaction to the financial sector earnings, it's definitely going to stand out. And again, every technical analyst, every trader will then point to the double top at the high of the COVID bounce being very key. And when everybody can concrete see that as a reason for things happening, it makes it more valid, in my opinion. So I am cautious. I've been playing Tesla bearish day after day. I've been playing both directions, but certainly the majority of my gains have been bearish, including today. And I am swinging a small position overnight. Want to see 1471 break in extended hours, ideally. But again, it's all of these high flyer, blue sky names. Tesla, PTON, look at that top. It's just a complete turnaround. Tops are marked. Now the question is, how much follow through do the bears get from here? So I'm not all bear. I will be watching for the potential of daily higher low entries into tech names sometime later this week. But I am absolutely cautious as a bull in this market and making sure that I am not too overextended in one direction. Again, my IRA right now has SPY position from the 240s that I entered on the initial COVID dump. And I'm holding those because I can't withdraw that money until I'm 60 whatever, which is 30 something years. So I'm holding that. That's a no touch position. But I don't want to load up on gold with the remainder of the cash in my IRA because again, that's almost double exposure. If gold was going inverse to the S&P 500 during fear, I would absolutely be entering gold positions. But because of this correlation when fear strikes, I don't want to overexpose to the side of the bulls. And that's just me being a bit more conservative and a bit more protective and being very agile in and out, day trading, mostly cash and protective. So we'll see what the financial sector earnings do. And we'll see if the SPY bears can break that daily higher low at 310.68. That's a key level for the rest of the week. Hope you're all well. Have a good rest of your day, and we will see you soon. The first clip in today's end of the day video are two frogs. They're face to face. One of them is white and the other one is brown. And they live under the cover of the hot tub. They like the moisture and the warmth there, so they're there every night. And every time I open that cover, they're different colors because the surface of the hot tub is marble and it's gray and white and brown swirled. So sometimes it's one white and one brown. Sometimes they're both brown. But it's very fascinating because it's completely pitch black under there. So they are morphing to whatever area of the hot tub they are sitting on without there being any light for them to look and see. So I don't know how frogs and their changing skin works, but it's very interesting that it happens in complete pitch black under the hot tub cover.